When you want to buy a house that is a total disaster, like the one that I bought behind me, you need to plan on gutting the house, repairing the major systems in the house, then you got to renovate it and make it look appealing. But where do you find the hundreds of thousands of dollars to do that, and how do you get that money? Well, stick around because today I'm going to show you exactly how I do it. Let's talk. Welcome to Real Estate Talk, everyone, and today I thought I would do something a little different and bring you to a house, a project that I'm currently working on, and I wanted to show you exactly what it takes to get funding for a house just like this. There are definitely a lot of options out there for a big project like this, but don't worry, it's not too complicated. But before doing that, let's go ahead and talk through what's the difference between getting a regular loan and trying to get funding for a house like this. Well, it's very simple. On a regular residential house, when a bank wants to give you a loan, the house has to be livable. It has to have a good roof. It has to have electrical, plumbing. All that stuff has to be done and completed before you buy and move in, especially if it's going to be for your primary residence. But when you're looking to get funding for something like this, where it needs to be gutted, you need to probably get permits. All that changes. The type of loan, the bank, the lenders, they understand that that's exactly why you need a loan. So it changes the requirements a little bit. A lot of time, what makes or breaks you getting funding for a house like this is not necessarily your credit. It's going to be, do you have money in the bank? Can you afford to fund this? Can you afford the loan, the payments? Is the house going to cash flow after? Are you going to get your equity back? All that matters a lot more than just your credit score. So let me tell you guys, when I bought this house, it was a disaster. It was a gigantic hole in the roof. I don't know if y'all can see it, but this roof is brand new. There was a hole in this roof. The windows were shattered and broken. It was just a complete mess. The AC, there was a fire in the house, so the AC system was completely shot. We had to completely redo everything, wires, plumbing, nothing was up to code. So, I mean, there was a lot of work that's been done, still a lot of work left, but that's the best kind of house you want to buy. You want to try to get a house that is horrible looking, it's ugly, it's a disaster, in a good neighborhood, because that's where all your profit is going to come. So where do you and where did I find the money to be able to fund something like this? Because I tell you what, it wasn't cash. So let's head inside, see the progress of this one, and we'll get started. So today, as promised, I'm going to give you guys a bunch of different options. So we're going to go through talking about different options like cash, lines of credit, hard money loans, private lending, and there's actually going to be a couple of ways that you can combine some of these into one. So the most obvious way, and probably the least practical and the least efficient way of doing it, is just to fund the whole thing with cash. You got $300,000-$400,000 laying around, great. You can come in and buy a house like this at least here in Louisiana. You can fund the whole thing. So you could easily do that with your cash, but there's so many reasons why I don't like just using straight cash. So number one, you're tying up all your assets, because if that's what you have is cash and you don't have a lot of other properties, or you only got a couple, you're tying up a large portion of your assets in your portfolio into one thing. And usually if you have a lot of cash, then you have options. You have way more options than just spending that cash to get financing for this house. I love the concept, and a lot of big names say the same thing, but you want to use other people's money. Don't use your own if you can avoid it. So if you have that cash, what should you do? Well, I would suggest trying to get some sort of a line of credit. Lines of credit are very simple. You have an asset, which in this case would be your cash. You take it to the bank and you say, hey, I have X amount of dollars. I would like to get a loan against this money. And cash is amazing because usually banks will lend you 90-95% of the value of cash. So for example, if you had $100,000 in cash, they would lend you $95,000 worth of that money. You still keep your cash, and a lot of times they'll put it into like a high yield savings account where you can earn a little bit of money every month. And then now it's very simple. You have a loan, let's say it's for $90,000. You can go out and you can buy a piece of property with that. Sometimes you can use it as a down payment on another property, especially if it's listed for sale, or you can cold call people. But that line of credit is huge because you don't get charged any interest on it until you actually use it. So if you never draw from it, you'll never have a payment on it. And a lot of times, a lot of these payments are interest only. So they don't really care about getting the principal back, because if they have the cash that is your collateral, they don't care. They will take all the interest in the world from you. Now, a far more practical way of funding, let's say your very first flip, is going to be through what's called a hard money loan. This is one of the ways that I'm actually using to fund this house. I've combined a couple of things, which we'll talk about later. But for this house, a hard money loan is perfect, because once I bought the house, I bought it with a line of credit. Again, I'll talk about that later. But you can get a hard money loan to fund the entire renovation of this project. So let's explain exactly how a hard money loan works. Hard money loans are specifically, most of the time, used for flips and renovations like this for investors. There's a ton of lenders out there all across the nation that will easily fund a project like this, and the requirements aren't that bad. They're pretty straightforward. And this is where having that cash is gonna be really nice, because you can tell that hard money lender, hey, not only do I have this house that's an asset that's gonna be worth X amount of dollars, but I also have cash behind my name to support any payments, or if I default, those kind of things they love. So what a hard money loan does is the lender will come in and they'll evaluate the property, they'll evaluate your portfolio, they'll look at your assets, your personal assets, any businesses that you have, and they'll ask you, okay, well, how much money do you need to renovate this project? And let's just say, for example, like on a house like this, you're gonna need like $110,000. They'll walk through all your assets, they'll walk through the value of the property. They're gonna more than likely wanna see estimates from different contractors. They wanna make sure people are licensed. They wanna know your entire plan for the house before they give you any money. Once they see that you qualify, the house qualifies, your project makes sense, the money makes sense, they'll run their numbers to make sure the house is gonna be valued at that. Once they check off all those boxes, it's pretty simple. Within a few days, you go to a title company, they do the paperwork, kind of like a regular loan, and boom, you get wired the money the next day. Now, a lot of times, hard money lenders will loan you money in increments, so they'll give you like 2 or 3 draws. They'll say the first couple weeks, we'll give you 20,000, then we'll give you 50, and then once everything is good and verified, we'll give you the last little bit to pay everybody. But there is another way to kind of go about this whole project, and I was mentioning earlier about lines of credit. So what I love doing is, because I like my houses and my assets, when I buy them like this, I like them to be what's called free and clear. All that simply means is there's no mortgage on it, there's no lender behind the house. I paid cash for the house. But if you remember, I don't like paying cash for a house. So how do you make a house look like you paid cash for it without paying cash? That's exactly where those lines of credit come in. Lines of credit look like cash when you go pay for a house. Here's the reason. That line of credit is not tied to this house. That line of credit is actually tied to the cash that I have. So when I go to buy these houses, I use my line of credit, I pay cash for them. I could then turn around to a lender and legally say, I own this house free and clear. There's no mortgage, there's no debt on it, it's just mine. And when they see that, they love it, because they can easily lend you a lot of money against this house. And so I know most people, when they're trying to get into their first investment property, a lot of you guys are gonna already have your first house. And so here's a great strategy that you guys can use. And someone like Dave Ramsey is not gonna love this, but it actually makes sense. And if you can manage it, it works amazing. So a lot of you guys are gonna have your first house already, and you've probably been living in it for a few years. You're probably in a market that appreciates, 1 to 2% a year. So here's what you could do. There's a line of credit called a HELOC. It's a home equity line of credit that is meant for residential and primary houses. You can go to the bank that holds your current mortgage, and you can say, hey, look, I'm interested in getting a HELOC. Do you all offer that? And if you do, does my house qualify? So this is what it would look like. Let's say your house is worth $400,000 and you only owe $200,000 on your property, which would mean you have $200,000 worth of equity. Most banks are gonna lend up to 80% of your total equity. So if you have $200,000 worth of equity, they're gonna loan you about $160,000. Now, granted, you have to have the income to support it. Your credit score does need to be good. But if you have a good credit score and you are married, or let's say you're not married, but you have a great job and you make a lot of income, don't have a lot of debt, the lender will easily lend you this money. And the reason is because you have the equity in your house. And so basically, if they lend you all this money and you default on a loan, no problem. They can just sell your house. They'll be able to pay back the home equity line of credit, and they'll pay off the mortgage. The bank will be left with a little extra money, so they win. So that's the reason they don't care about lending you this kind of money. And now I know some people are gonna say, man, you should never put your personal primary residence in jeopardy if you're doing business, and I get it. But if you're just starting off, this is more than likely gonna be the best option for you, especially if you don't have hundreds of thousands of dollars saved up. So if you can combine the home equity line of credit to purchase maybe a house, that's gonna look like you paid cash for that. And then guess what? You're gonna turn around to a hard money lender and say, hey, I own this house free and clear. I'm looking for $50,000, $60,000 to go ahead and renovate this property. They're gonna say, you know what? No problem. We'll tie the hard money loan to this house, the asset. We'll give it to you. And here you go. You have now a line of credit that you've purchased a house with. You have a hard money loan to renovate it. And when it's all said and done, you're gonna turn around, get a renter. They're gonna easily pay for all of that. You can now go to the bank, refinance this property, pay off your line of credit, pay off that hard money loan, and now you have an asset that is producing cash flow. It better be producing cash flow. And all the while, you have not used a dime of your own cash to do this. And one of the best parts about all of this is once you get enough of these rental homes and they start producing cash flow, they start building equity, now you can switch from using your primary residence. You can now take the equity in all of your rental properties and do the exact same thing. And so now you have rental properties that are paying for more rental properties in the future. That's the beauty of real estate. And if you do this right, you'll have cash flow, you have equity, appreciation, and the best part is gonna be tax-free. Now, there is one final way that I wanna talk to you guys about to get funding for this house, and it's gonna be known as private lending. And private lending is actually very simple. It's not complicated. So private lending, what it is maybe you have a friend or a coworker, a family member, someone who just has a lot of cash. They don't necessarily wanna get into the investing realm of real estate, or maybe they don't want to get into the stock market either, but they have cash. And so what they can do is they can become your lender. And really all you need to do is have a promissory note, get it notarized, come up with a set of terms. What's the interest rate gonna be? When is it gonna be due? Do you have to make any minimum monthly payments? If so, what are they? Very simple, but very effective. And you could easily get a family member, a friend who is looking to make 5, 6%, 8% on their money, and you can get funding very easily. The benefit of that is there's not gonna be credit checks. More than likely, there's not gonna be any asset checks. Really, the private lender, they're just gonna wanna make sure that this house is owned free and clear, and then they'll just tie that promissory note to this house, and that's it. Now, the downsides of this is it can be kind of an emotional thing when working with friends and family to get this type of lending. But if you know some really wealthy people, this could be a huge advantage for you. And you can combine private lending with hard money loans or lines of credit. So if you only need $50,000 to maybe renovate something that's a smaller project and someone's a private lender willing to lend you that, definitely look into it. Now, there is a lot more to doing this than just getting the money and boom, all of a sudden you got $1 million or you got a cash flow property. There's an actual process to renovating a house like this. There's a process to finding these properties. There's a whole thing that you need to do before you even get the money. And then there's a whole process that you need to do after you get the money. So all you have to do is click on this video right here to learn how you can invest the same way.